Hi guys, welcome to a new episode of your IGCSE Tutors. Today I will be discussing this Cambridge IGCSE Accounting Paper 1. Question 1. Which task is performed by a bookkeeper? So first we need to know what this bookkeeper does. They record transactions and they post entries. So let's see which option is correct. A. Analyzing accounting ratio wrong, interpreting the income statement wrong, posting entries correct, and preparing a statement of financial position no. So the answer for A, B, and D refers to accountant. These are all accountant's tasks. Okay, move on to question 2. A. Accounting involves measuring profits and losses. So this is correct. B. Accounting is a recording of financial transaction. No. Bookkeeping is the recording of financial transaction. Okay, C. Bookkeeping involves communicating financial data. Bookkeeping requires the use of ratio analysis. So again, A, C, and D. So C and D, they are accounting. Okay, so only B is bookkeeping, but we need to find the correct answer, so A is the answer. Okay, so moving on, question 3. In which book of prime entry does a trader record cash discount received? Okay, so in total we have 3 book of prime entry. We have cash book, sales journal, purchases journal, sales return journal, purchases return journal. We have general journal and petty cash book. Okay, so how do we know? Because here already give you a hint, it's relating to cash, so immediately we know it's cash book. And when you say discount received, it's also in the cash book because remember there are 3 columns in cash book. So like for example in the debit side there are first discount allow, and then you go to bank, cash, and same in the credit side you have discount received, bank and cash. So A is the correct answer. Question 4. The analysis columns of a petty cash book shows the following totals. How should these totals be posted to the ledger? Okay, so the thing to take note is these 2 transactions are in petty cash book, and as we know, so you need to know the double entry. So because postage and stationery, they are all expenses, right? So you should debit expenses and then you credit your petty cash book. Okay, petty cash account. So this should be 20, 31, and petty cash is the sum of it. So is 51. Yeah, so let's see which one is the correct answer. Yeah, D is the correct. Debit postage account with $20 and stationery account with $31. Moving on to question 5. Which business documents are not entered in the books of prime entry? So not entered. Okay, so in entire accounting, in the IGCSE syllabus, so there are 2 main documents that you do not ever enter in the books of prime entry. First is debit note and second is statement of account. Okay, so first one, credit note, is sales return. You usually when you have sales return, then the supplier would issue the credit note, right? But for debit note, it's usually issued by the customer to the supplier to request like for a reduction, to request for sales return, right? So this is not recorded. And then for invoice, it's to record credit sales. Yeah, again. So, credit sales is put into sales journal, obviously, and then credit note is for sales return journal. And then moving on to the statement of account. So this is a summary of account issued by the supplier to us, or vice versa, is to remind the business of the amount due at the end of the month. So it's basically issued by supplier to customer to remind the amount due. So both debit notes and statement of account are not recorded in the books of prime entry. Okay, so moving on to question 6. A trader has the following ledger account. What does the balance on 1st January year 2 represent? Okay, so they're asking you about this. Okay. So first, it is about heat and light account. So this, we know it's an expense account. Okay. So when it's an expense account, we know that here it's actually accrued. Okay, because an accrued expense is a liability because you already incur it already, but you haven't paid for it. So it's a current liability. Okay, so let's see which one is the correct answer. Heat and light outstanding. Yeah, the first one is the correct one already. So A is correct. Moving on to question 7. Which statement about a trial balance is correct? Okay. So before this, looking at the answer, I have a list of purposes of trial balance. So it's basically the uses of trial balance, right? So the 3 main purpose, as you can see, first one is to check the arithmetical accuracy of double entry records. Second is to provide details to be used in preparation of financial statements. And the third one is to provide quick access to information about account balances. So let's see if the answer corresponds to this. Okay. So I'll make it bigger like that. Okay. A, it is a list of the ledger balances on a particular date. Yeah, this corresponds to this. So we know that A is the correct answer, right? Okay, but let's continue to see. It is a part of double entry system of bookkeeping. No, it's basically just showing the account balances. So the double entry involved is in the ledgers. Okay, so it is proof that all items have been posted to the correct accounts. It is proof that all transactions have been entered in the books of account. Okay, so basically, trial balance can still contain error. So it can just tell you, it just show you that the trial balance isn't balanced. So it's the accountant job to find out where is the error, but it does not prove that all items have been entered to the correct accounts. Yeah, so it's just showing that it is not balanced, and accountant go find the error. Okay, so they're all wrong. So basically it's A. Moving on to question 8. Trevor prepared his financial statements for the year ended 31st December 2020. He then discovered that he had omitted to record a cash payment $240 for insurance for the 12 months ending 30th November 2021. What was the effect of this error on his statement of financial position? Take note is the effect of the error. Okay. So First, we need to draw out what's the year end. So the entire accounting period is from 1st January 2020 to 31st December. Okay, and then this one is your year end, right? And this one is your insurance year end. So it's from the period is from 1st December 2020 to 30th November 2020. But in the question, it stated that he had paid for insurance already during this year. So okay, during this year, well, I'll just highlight it. Okay, during this year, the business already paid insurance. Okay, for 12 months. Okay, for 12 months of this. Okay, so if the business is already paid at the 31st December 2020, you can see that actually only 1 month is incurred, but the rest of 11 months is actually prepaid. Okay, so your prepaid starts from 1st January to the 30th November 2020. So if you can see like that is good, but if not, then we can draw the accounting period to help us visualize. Okay, so this is the 1st December 2020. Okay, so 1st December is when your insurance start, and then 31st December is your current year end, right? So from here we can actually see, because the total is 240, then we can actually calculate. Okay, so like the bracket, as you can see, is what we incur. So it's 240, we times 1/12. Because only 1 month incurred, so you can get 20. This is the actual amount that we record in our income statement. Okay, and then the rest of the 240 times 11 months, because 11/12 because is prepaid, so we know that prepaid is 220. So this is what we actually incurred 1 month, and this one is what we prepaid. Okay, so by drawing this, it can help you to visualize. And this is 30th November of 2020. Okay, let's see the answer. So cash, because you haven't record, so you haven't record, it means that because you omit, right? Omit the cash payment, means that you overstated it. So this one is correct, okay? Because you already paid, but in your financial position, you didn't account for this cash payment. So this resulted in your cash being overstated. Okay, go on. Other receivable. Your other receivable should be understated because you didn't record for this transaction. Okay, so it should be 220 because we already calculate the prepaid amount is 11 months. Okay, so you can see that it's here. It's 220 being overstated here. Okay, and capital. So how to calculate capital? So we can see the overall change in the overall change first. So we can write down cash. So cash overstated, then we write overstated 240, and then other receivable, you understated 220. So the overall change, the overall effect on the capital is actually, so 1 plus minus 220, I'm sorry, 220, so the overall change is that you overstate 20. Okay, so yeah, so this is your capital. Okay, so B is the answer. Question 9. A payment of 68 for insurance has been entered in the insurance account as 86. So as you can see here, you overstated by 18. So this is what you record initially. You debit insurance 86, and then you credit bank for 68. For bank is correct, but insurance is wrong. So you need to correct it. The correction is, so because you overstated, you need to credit it to reduce the amount by 18. And then because here we don't have anything to debit, right? So usually we debit suspense 18. Okay, so the answer is C. Question 10. A business has received a bank statement. The bank statement shows the following entries. Okay, we see the following entries. Which items appear in the debit column of the bank statement? Okay, so very important, you need to know that debit on the bank statement means withdrawal, which is like removing the money from your bank account, while credit means adding money into a bank account. Because why is bank statement credit means more money in your account is because the bank is owing you money. So as you put in more money inside your bank account, the bank owes you more. So okay, you just need to remember withdrawal is debit, while like bank in that money, so like deposit, okay, when you deposit money inside, then it's credit. Okay, so let's go. First, a check issued to a credit supplier. So you issued a check means that you remove issued to a credit supplier, so it's debit. Yeah, it's correct. Okay, because you withdraw it. Second, a check received from a credit customer, so this should be credit because your bank balance increased. So this is not debit. Okay, a monthly rent payment made by standing order. So again, money withdraw, so debit. Charges made by the bank, yes, so it's debit. It removed from a bank account, so it's 1, 3, and 4 is the final answer. Okay, question 11. On 31st May, the bank statement of business showed a positive bank balance of 1790. Comparing the bank statement with the cash book, the following items were discovered. Okay, for this question, you need to prepare a bank reconciliation statement. Okay, you can refer to this. Okay, so balance, let's put down the balance first. 1790, it's positive, so yeah, just put it as it is. The bank had charged 35 in error. Okay, so this means that the bank has over deducted. When it's over deducted, what does it mean? Over debited. Okay, remember debit means withdrawal. So when you over deducted, you need to add back to a bank statement, right? Okay, so you need to put bank error, bank charges error. Okay, because you over debited. So now you need to add back. Add back is to credit, so it's 35. Okay. Unpresented checks totaled 550. So we know that unpresented check is 550, so minus. And uncredited deposits is at because the money increased in your bank account. Okay, so you calculate, then you will get 1525. C is answer. Moving on, question 12. What would not be included in the sales ledger control account? Not be included. Okay, A, cash sales recorded in the cash book. Okay, this is the answer already. This you will not record in sales ledger control account. Why? Because cash sales is recorded in the cash book. So it's originally not recorded in the sales ledger. So it cannot be entered in the sales ledger control account. Okay, B, checks received from credit customer, goods sold on credit recorded in sales journal, e-recoverable debts. These are all the items that can appear in sales ledger control account to check the arithmetic accuracy. Okay. Question 13. Nadia provided the following information for the month of July. There was no credit balance on the account on 1st August. Okay. What was the debit balance brought down on the sales ledger control account on 1st August? 1st August means, because this one is your month of July, this means the closing. Or basically you can say it's like the 31st of July. Okay. This one is the sales ledger control account. So you can just prepare one. Okay. Okay, so credit side is the minority balance 215. Okay, so you just entered sales 550, sales returns credit. Check received is bank 4840. E-recoverable debts credit 280. Okay, this one interest charge is debit side. Also, this one is a special one you need to remember. It's always debit side. Okay, so calculate, and then you will get your balance CD as 1560, and then you bring down. Brought down. Yeah, because it says it's the debit balance, right? So you know it's correct. 1560. Okay, question 14. Samir runs a car hire business. He received cash payment for the car hire. He also received the proceeds from the sale of an old vehicle. Which type of receipts were they? So, before that, you need to know there are two types of receipts. First is revenue receipt, which is the income you earn from day-to-day trading activities. So it's like the day-to-day business activity, right? From like selling of goods, buying of goods. No, it's from selling of goods. So it's it's like your cash sales. And then your capital receipt is the income you earn, which is not from your day-to-day business activity. Okay, so there are usually three types of capital receipt. First one is the sale proceed from disposal. Okay, disposal of non-current asset. Can also be the proceed you receive from loan. Okay, and it can be proceed, or can be from introduction of capital by the owner. Okay, so there are three types. Let's see. Car hire is definitely revenue because it is from day-to-day business. Proceeds from sale of an old vehicle, this is capital. C is the answer. Okay, question 15. The following ledger account appear in the books of a trader. Van receivable account. This one is an income account. Which entry was made in the income statement for the year ended 31st December 2024 rand. Okay, so before that, you need to know that a credit opening balance means that it's a prepaid. Okay, because a prepaid income is a liability, because your customer already pay you, but you still owe them a service or owe them a good. So this is a current liability. Okay. Well, this one is a closing. Yeah, so this one's a closing. Yeah, and then this is a prepaid. How do I know? Because again, if you bring down, this is the same. So this is also prepaid. This is why I know this one is a prepaid amount. Okay, so okay, you just like calculate, and then you'll get income statement here. The amount you'll get is 3,400. So basically you just add up here 400 plus 3,600, and then you minus 600, then you get 3,400. Okay, so it's saying that which entry was made in the income statement. Be careful, don't straight away just pick debit side, because the double entry is you debit rent receivable and then you credit your income statement. Okay, so when you credit income statement, this means that this is an income, so it's a credit side here. Okay. Okay, 16. Mandip depreciates his motor vehicles at the rate of 20% using straight line method. Means you depreciate on cost. Okay. A full year depreciation is provided in the year of purchase. Mandip bought a motor vehicle on 1st January for 20,000, and then on 1st June 2020 he bought a second motor vehicle for 10,000. What was the depreciation charge on the motor vehicles for the year ended 31st December 2020? So first, draw our accounting period. It's from 1st January 2020 to 31st December 2020. Okay, let's calculate depreciation. Okay, right here. So the first motor vehicle, you already bought it years ago. And this is simple because you just use 20,000 times 20%. Okay, because it's on cost. Second motor vehicle, okay. This again, note this, okay, full year depreciation is provided in the year of purchase. So which month you bought doesn't matter, because you will still charge a full year depreciation. So you just use 10,000 times with 20%. So you will get 2,000. So the total depreciation charge for the year is 6,000. Okay. Moving on, question 17. Why does a trader maintain a provision for doubtful debts? Why? Okay, 1. To ensure amounts owing to the business for which payment is unlikely to be received are regarded as an expense. Okay, so this is true because the business always, to anticipate the losses, they'll record the increase in provision for doubtful debts as an expense in income statement. So you regard this as an expense. Second, to ensure the trade receivable of the business are not overstated by providing for debts which are unlikely to be paid. This is correct because this is based on the prudence concept. So you do not want to overstate your trade receivable, current asset and profit. Third, to identify credit customers who are not able to settle their accounts by the end of the financial year. This is not correct, because this usually is the role of credit control. Option 4, to provide for the amounts from credit customers which are unpaid at the end of financial year. This is not, because it says unpaid, it's not likely to be unpaid, so this is referring to irrecoverable debts, which is not relevant. Answer is A. 18. Why is inventory value at the lower of cost and net realizable value? It is to avoid overstating profits and current assets. Again, this is prudence concept. So B is the answer. Question 19. At the end of a financial year, Cindy valued her inventory at cost. This valuation incorrectly included damaged goods costing 300. Cindy estimated these goods could be sold for 100. So when you value your inventories, you need to lower at cost and net realizable value. Okay, so the formula for NRV is this. You use the estimated selling price minus the estimated selling cost. So first, let us calculate the NRV, which is 100, and there's no selling cost, so no additional cost to repair, so we say that it's 0. NRV is 100, and then your cost is 300. Okay, so when you use cost minus NRV, you will get 200. Okay, so I'll give you an example. So if your original inventory valuation, your original inventory is 5,000. Then after correction, your new inventory valuation will be using 5,000 minus 200. Okay, so your inventory is now lower by 200. Okay, so let's see. But the option given is gross profit, profit for the year, and current assets. There are no closing inventory, so how do we know? Okay, now you need to really imagine. So after correction, you can see that your closing inventory is now lower. So what happened to closing inventory lower? Cost of sales will be higher. Okay, this is following the format of income statement. So if you're not sure, you can go back to the income statement, refer. But if you know, you can just imagine. And when your cost of sale is higher, your gross profit will be lower. And subsequently, profit for the year will also be lower. Okay, so let's see. Gross profit lower, decreases. Current asset will decrease by 200. Yes, correct, because closing inventory is under a current asset, so it will decrease by 200. A is the correct answer. Okay, 20. Which business is not a service business? Accounting's practice, convenience repair shop, flower shop. Yeah, flower shop because you sell flowers, right? Flowers is a good and not a service, so C is the answer. Question 21. A trader was preparing her statement of financial position at 30th June 2021. She had 4 bank loans. What was the total amount of loans that should be recorded as non-current liabilities at 30th June 2021? First, we always need to draw out the accounting period first. So it's 1st July 2020 to 30th June of 2021. So how do we know that the loan is non-current liability? So we need to find a loan that is more than 12 months away from the year end. And we add up them, it will give us non-current liability. Okay, first 1st December 2021. So you can see this one is within our accounting period, right? So we exclude this. This should be a current liability. 1st December 2022. Okay, we can count. So it's more than 1 year from this date. Yeah, so it's a non-current liability. And the rest you don't need to see. It's very obvious that these are all non-current liabilities. So you just add up 10,000, 8,000, 6,000, it will give you 24,000. Question 22. What is shown in the partnership appropriation account? Okay, this is the distribution of profit or loss. Yeah, so B is the answer. I'll say this is quite straightforward, so it's something that you need to know and memorize. Okay, question 3. Rajit and Sunil form a partnership on 1st January 2019, but did not prepare a partnership agreement. They provided the following information. Okay, they decided to draw a partnership agreement for future years. Which item would be most beneficial to Rajit in 2020? So you need to see Rajit. Okay, so we can compare. Rajit introduced more capital. Okay. Drawings, he also has more drawings. And then for the share of work, it's equal. Okay, so A, interest on capital. So because we know that Rajit brings in more capital, so he's likely to get more interest on capital out of it, right? So with interest on capital, it will benefit him more because Rajit brings in more capital. So A is the correct answer actually. But let's see the other answer. Interest on drawing. This is wrong because Rajit actually, he withdraw more. When he withdraw more, then he needs to pay more interest. So this is not beneficial to him because Rajit has more drawing. Okay, C, limit on annual drawing. This is not good as well to Rajit because he will have a lot of drawings actually. So if you limit him, then it's not beneficial for him. Partner salary, no, because the share of work is quite equal. So the equal amount of workload, so it's likely that the salary he gained is almost similar to Sunil. Okay, so A is the answer. Moving on, question 24. A company supplied the following information. What is the total equity? Okay, so equity is, share capital is generated reserve. Retained earnings are also total equity. And we know that long-term bank loan and debentures, they are non-current liability. So they are not. So you just add up all the tick ones, you will get 380,000. Question 25. Which apply to both debentures and preference shares? So no voting rights, yes. Both of them do not have voting rights. Only ordinary share has voting right. Fixed rate of return, yes. Because debenture, they have fixed rate of interest, and for preference share, they have fixed rate of dividend. Third, included in capital employed. So you need to know capital employed, the formula is total equity plus with non-current liability. So debenture is a non-current liability while preference share is under equity, right? So yeah, they are both included. So A is the answer. Question 26. The AB Sports Club runs a cafe for the use of members. The treasurer prepared a draft financial statements which show a deficit of 700 and an accumulated fund of 4,600. He then discovered that the closing inventory of the cafe had been overvalued by $50. How much were the deficit and accumulated fund after the inventory valuation had been corrected? Okay, so this one you need to draw a draft deficit. Draw out the statement so you can see it. Deficit, so it's negative. We put the bracket beside it. So now we correct it. Closing inventory is overvalued. So now we need to reduce by 50. Yeah. Why? Because when you reduce closing inventory, you will increase, your cost of sales will increase and your profit will reduce. So the effect of profit is reduce 50. Actually, it's not profit, it's either surplus or deficit. But I'll use profit for your for easier understanding. Okay. So your corrected deficit is 750. So here, corrected deficit. Okay, so this is correct. So let's see accumulated funds. Okay, so your accumulated funds is like your capital. And usually we'll add profit for the year, right? But for this case is clubs and societies, we'll add surplus and less deficit. In this case, we'll less deficit. And you just put your okay, this one is your original one, but because your deficit increase, so you need to increase by 50. From here to here, your deficit increased by 50, so you'll need to minus out this 50. And your corrected accumulated fund will be 4550. Corrected accumulated fund. So this one is the correct answer. Question 27. Which accounting statement prepared by the treasurer of a sports club provides a summary of all the monies received and paid out during the financial year? So it's like a bank account for the club and society. So it's a receipt and payments account. Okay, 28. At the end of financial year, a manufacturing business owed rent on its factory. Rent. Okay, the business adjusted its financial statement to account for this. What effects did this adjustment have? First, we need to know what rent is. It's a indirect cost. Okay. So this means that it is not directly related to the production, and it's a factory overhead. Okay, if you're unsure, you can go through the format of your manufacturing account so you will know. So prime cost is when you record all the direct costs, right? Okay, so it's a total of the direct costs. There's no effect on it because this is an indirect cost, so it won't affect. Cost of production, yes, it will increase. Okay, gross profit, when your cost of production increase, your gross profit will reduces. So B is the answer. Question 29. What is a direct cost for a manufacturer? So direct cost means it affects the production directly. There are 3 types of direct costs. First is direct material. Second is direct labor. Third is direct expenses. Okay, so direct expenses often includes license fee, royalties. Okay, so first, carriage outwards, no. Depreciation of delivery vehicle, no. These are recorded under your income statement. Factory supervisor salary, no. This is under factory overhead. The production royalty, yes, correct. This is a direct expense. Okay, so D is correct. 30. A business uses a 20% markup to arrive at its selling prices. During year, it made purchases of 35,000. Inventory decreased from 7,000 to 2,000. So this 7,000 is your opening inventory. To 20,000, so means that this is your closing inventory. The question wants you to find the revenue. Okay, so first we need to work out what is our cost of sales. This is our formula. So just plug in opening inventory 7,000, purchases 35,000, closing inventory is 2,000. So you will get 40,000. But wait, this is not the full answer. So how do we work out the markup? So to better visualize, we always know that markup, this means that 100%, cost is 100%. Okay, because markup is on cost, whereas margin is on sales. Okay, so when your cost is 100%, right? And your profit markup is 20%. So what is your sales? Is 120%. Okay, so in order to find your sales, you need to use 120% times with your cost, which is 40,000. So it's 48,000 as your final sales. 48,000. Question 31. What is needed for the preparation of statement of affairs? Statement of affairs basically is a very simplified version of your financial statement, which is just using asset equals to capital plus liability. It's basically just using this equation to show all the balances. So you will just need values of assets and liabilities. So D is correct. Question 32. Trader provide this information. What was the trader's trade payable turnover? So you need to know this formula, which is trade payable over credit purchases times 365. Okay, so now just plug in the values. Round up to 48 days. Question 33. George provided the following information. Okay, his liquid acid test ratio was 1.2 to 1. What was his bank overdraft? Okay, so we know that acid tests exclude inventory. Basically, the formula is like that. Liquid ratio is like you use all your current asset minus your inventory divided by closing liability. No, current liability, yeah. Okay, so non-current asset we don't include, inventory you also don't include, so only calculate trade receivable and payable. So let's plug in. So 18,000 above, it's your liquid asset, and then you divide it by your 8,000 is your trade payable plus overdraft, because overdraft is a current liability. Then you just equate 1.21. You can cross multiply, okay? So you'll get like this. Okay, just get 7,000. 34. The following ratios have been calculated for a trader. Profit margin, ROCE. What explains these changes? So changes regarding from year 1 to year 2. So when year 1 to year 2, your profit margin increases. From year 1 to year 2, your return on capital employed reduces. Okay, so what causes that? Before that, you can write down the formula beside, so you can kind of know. ROCE is your profit before interest divided by your capital employed. Okay. So here are some extra information for you. Reasons why profit margin increases. It can be due to gross profit margin increase, a better control of expenses, or your other income increases. Okay, so let's see. Drawings have increased by more than profit for the year. No. Wrong. Gross profit has increased, but profit for the year has decreased. No. Because your profit for the year should increase so that your profit margin can increase. So yeah, we definitely know the answer is in between C or D. Capital has been introduced. Okay, long-term loan has been repaid. So in order to make your ROCE to reduce, your denominator need to increase. Okay, so which statement shows that your capital employed has increased? So C, right? Because capital has been introduced. Long-term loan has been repaid. Because if your long-term loan has been repaid, means that your capital employed is likely to reduce. So the answer is C. Okay. Last question. William is a trader. He has received an order from James to supply goods on credit. When should William regard the revenue as earned? Okay, so this is the concept of realization, where it states that transfer of ownership is required for a revenue to be realized. Okay, A, when William accepts the order from James. No. When William delivers the goods to James. Yes, because this shows that there's a transfer of ownership from William to James. Full payment, first payment. So payment doesn't matter because they're on credit. The concept of realization we need to follow, which is the transfer of ownership. So we know that B is the answer. So here's the end of our video. Hope this video helps you a lot, and remember to like, share, and subscribe to our channel. We'll see you in the next